Good morning, folks, and welcome back to Almus Market Mornings. Any sort of geopolitical conflict tends to have an off ramp. It's basically a planned strategy to de escalate. But what we are instead observing is unplanned off ramps. There seems to be a sudden change in tone used by President Trump, who indicated in an interview that Iran war could be ending soon. Immediately after such comments, we saw oil dropping sharply, and that's eased some pressure on the risk assets. Good morning, JK. Quite a significant amount of volatility, and this time things seem a bit more optimistic. Do you think these are the first signs of hostilities coming to an end?
Good morning, Swaraj. Yeah, it's been a relief overnight as oil price dropped and also risk got a boost. If you recall, in yesterday's update, we had mentioned about the MAGA supporters being not in alignment with the Gulf War, prolonging for such a long time, and they were even questioning the objective of the war. And according to some reports, president's advisors actually warned him that continuing the fight could affect the support for Trump's operations among politicians, especially after several surveys have now showed that the public are not in agreement with the campaign against Iran. There are, betting markets that are showing Democrats will have victory in the House in the upcoming, rather somewhat distant, midterm poll. Although Republicans will still hold on to Senate. So there was a political compulsion for Trump to announce some sort of a, lesser hostility, or you can say even not wanting to continue the war as such. So that's what led to this sudden volte-face, and he has said that the war will rather end very soon. And there were also some sort of differences between Israel and Euro on some of the war strategies. And there was an attack on Iranian oil facilities by Israel, which the US side did not agree to. So this was a big relief. No doubt, Iran did not really respond very positively to it. They said that we are the ones who will determine the end of war. And they also said that unless the attacks stop, they will not be, coming for any sort of negotiations or ceasefire talks also. So while from the Trump side, he wants to move away from these battles, I think Iran-Israel issue, the hostility between those two nations continue. And so I think it's not all peace, but at least some relief because US is not participating anymore in the same. So that brought down the oil prices from as high as 119 to 86 in US time. In the meantime, there was also reports about G7 considering release of the strategic petroleum reserve, which most countries have stored for meeting the supply chain related crisis in such situations. This was in active consideration among G7 nations when the European markets started. But there was more or less many countries were slowly moving away from such a decision. In fact, India was one of the first who said that they were not considering a coordinated oil release with the IEA. And then French minister came back and said that this they are not there yet actually. And then subsequently G7 also decided that for the time being, there is no need for the oil resource to be released. The initial suggestion had come from Japan, who are in fact majorly affected due to oil supply issues. But then the fact that G7 ultimately decided not to go ahead with this move also indicates that they are perceiving the situation to ease off a bit. And in fact, in one of more relieving, development, some of the Indian ships have been allowed to pass through the Hormuz Strait. And so I think definitely we are in a slightly more benign atmosphere today as we start, unlike yesterday when we started the week with a really major risk of sentiment, and that's reflected not just in the oil price, but even the stock market. Yesterday, Dow at one point of time was 800 points down, and then eventually positive 200 points, and Nasdaq had a very strong rally, and it's in a world where all the economies, resilience is uh, to a great extent based on how the stock markets perform. They in turn determine the wealth effect and also consumption. Governments cannot afford to have a big slide or a sell off unless something is beyond their control. So I think there was a saving grace for the markets from Trump's statements and some other developments as well. Therefore, stock markets have rallied today. Asian market, it's been carried into the Asian markets, of course. Japan over 2% up, and then South Korea, which always been seeing a big moves with be it fall or rise, has today risen more than 5%, no doubt. Of course, this does not mean that oil is fully retracing. As I said, Iran-Israel hostility still continues. Israel has its own ultimate objectives, and then Iran is not going to yield to whatever they think is achievable. Therefore, oil price will be definitely elevated related to where we were about a month back. And this also puts central banks in a very unenviable position because price pressures are intensifying, particularly if you look at the US economy. Going by the unemployment report that was released on Friday, there is a rise in inflation possible due to oil price, and of course, the employment is weakening. Which mandate would the Fed heed to is the big question. And there are increasing indications that the next move by ECB will also be to the higher side. So we are slowly getting ready for the rates to go up, official rates to go up in most of the countries. Now, side by side with the improvement in the risk sentiment, dollar also gave up some of its gains. Euro back above 1.16, dollar yen, which had almost touched 159, is now in the mid 157s. Of course, not just the oil, it's also because some of the data from Japan has led to market not getting too bearish on the yen, at least at these levels, because the Japanese GDP announced today also came higher than expected. So we have seen all around a bit of improvement in the currencies, and yields have also dropped a bit after the oil prices have come off. On the rupee, yesterday we saw a new low at 92.40 almost. And then, of course, uh, there were some offers from PSU banks, but I think market itself was somewhat hesitant to buy the dollars at those levels. And now the at least the offshore is now showing that dollar rupee is trading closer to 92 now. That is some sort of a relief for the rupee. But yes, if there is sentiment further improves, we can see the rupee go towards the lower end of the range, at least at 91.50 or 91. But uh, also to see is that the FII flows have continued to be negative. Yesterday also say quite a big number, more than 6,000 crores negative. Uh, but as we enter the second half of, very soon enter the second half of March, I feel the flows will probably favor the rupee, uh, particularly from corporate side who tend to repatriate money ahead of the year end. So we are still not breaking the range as far as the dollar index is concerned, and the rupee also finding some sort of a floor against the dollar on optics. Thank you.
Thank you, JK. And yeah, so the key theme is because of the relief overnight, we are seeing risk sentiment being quite positive. Dow, which was down 800 points at some point, ended 200 points positive. So that's the quantum of moves that's happening. Asian markets also seem positive on this today. Dollar has given up some of its gains. Rupee, even though we saw a weakness towards 92.40 yesterday, it did seem that market themselves were very hesitant to buy dollars at those levels. currently in the offshore market because of the positive risk sentiment. It's trading close to rupees 92. We'll see how all of this plays out and whether the risk sentiment carries on for the rest of the week. That's it from us today. Thanks for listening. We will catch up tomorrow with a fresh round of updates.